drill down, where we drill down. We take a look at a stock in the news, we take it apart, trying to understand not the stock, but the company behind the stock. Now, here's a stock chart you can't help but notice. OpenTable, stock's up 176% in a year, over 400% since its IPO in May of 2009. But the valuation is fantastic right now. 166 times trailing earnings, 2.5 times PEG ratio. That means it's trading at 2.5 times its earnings growth rate. But all that tells you is that this is a crazy momentum stock. That is, it's about a chart, not a company. But the results at that company have been good. Maybe not quite as good as the stock chart would suggest, but what could be. Stock straight up and to the right. Not so the different segments of OpenTable. Now, understand how OpenTable makes money. Basically 3 buckets. There's dinner reservations, website subscriptions. Now, OpenTable also calls it electronic reservation book, and installations. Now, installations is just 8% of revenues, so we'll ignore that from now. But reservations of subscriptions, big and growing. Well, how fast? Some of it's strong. Reservation growth, impressive. 6 quarters ago, growing at a 25% clip. That jumped to 80% in the last reported quarter. 6 quarters ago, subscriptions grew at a 16% clip. Now just 21% now. So the pace of growth continues to decline. Now, what should OpenTable do to accelerate growth? Well, duh, they do restaurant reservations. So you want to add new restaurants. And here's where OpenTable results look particularly troubled. The number of North American restaurants OpenTable's adding is actually in decline at last quarter. Now, it peaked at 40% 5 quarters ago. That pace of increase has turned negative. So unless OpenTable can reignite growth in North America or somewhere else, the momentum stock traders in OpenTable could feel a little bit hungry. Joining us to discuss that, OpenTable CEO, Jeff Jordan. Jeff, glad to have you.
Thanks, Cory.
Good to see you, Ben. It's been a long time.
It has.
Real.com. I had a real voice back then, but it's been many years, you were saying, before you left. Real.com,
right. No,
eBay.
I'm very happy to be working in a real business right now.
Yeah, well, you guys have done fantastic things since the IPO.
Thank you.
The momentum investors are behind the company big. This is not a stock show or a company show. But tell me what you're doing to reaccelerate growth. I want to point out sort of the slowdown, even the decline in growth in North American restaurants. What are you doing to accelerate growth again?
No, overall revenue growth has been accelerating pretty substantially from the 20% range up to closer to 40% in the last quarter. So we're very pleased with that. 2 main strategies: add restaurants faster and have more diners booking through OpenTable. Last quarter, organic diners seated, excluding our new acquisition, were up 51% year over year. So that growth's been accelerating, and the base of restaurants has been accelerating behind our new product called OpenTable Connect.
So the numbers I had, and you can tell me my model is wrong, but it said that the new restaurant ads, which is how many you add sequentially, the sequential increase is actually down. So you added more in the third quarter.
We now have 2 different products for restaurants. One is our traditional electronic reservation book that we've been selling for 12 years. It replaces the pen and paper book and manages the restaurant operations in real time.
That's the one that's down.
That's the one that year-over-year growth is relatively flat in the low 20s. The other product is a new product called OpenTable Connect that we debuted in the second quarter of last year. It's a much lighter product to appeal to a smaller restaurant, essentially, and that we installed over 1,000 restaurants within the first calendar year of introduction. So in aggregate, restaurant additions have been accelerating.
Jeff, I want to ask you about your Groupon-like Spotlight service, which you launched last year. You added a few cities. You added a couple more cities this year. But for example, like Minneapolis, you're only seeing a deal once every other week. Why aren't you growing that more quickly? Isn't that a big opportunity for OpenTable?
Yeah, no, we're the product we debuted in August of last year, and we now have it out to 11 different metros. We're pleased with the growth. It's the fastest growing new product introduction we've ever done. The main constraint on our rate of expansion is our supply of restaurants. We've made a strategic decision just to promote restaurants that are on the OpenTable network. And, take a city like Minneapolis. It may only have a few hundred restaurants currently on the OpenTable network. And so a deal of a day would imply you promote those 200 restaurants 250 times. So we're pacing the frequency of mailing to the population of our restaurants, along with the fact that not all of our restaurants want to offer half off of their restaurant at any one given time.
That's what I was wondering. Are you seeing resistance from restaurants to offer steep discounts like what Groupon does, or resistance from diners to kind of pick up couponing?
Yeah, no, the diner acceptance has been very strong because when you get the quality of restaurant that's on OpenTable and the restaurant's willing to provide an incentive to try it, that's a strong offer. On the restaurant side, if you're a full restaurant, say someone like Spruce or Chez Panisse that's on the OpenTable network in the Bay Area, they may not feel the need to offer a 50% discount to fill their remaining seats. Other restaurants on the other end of the spectrum may. If a big, large restaurant or seasonality or intra-week seasonality, it's those restaurants that the product appeals to.
Now, let me ask you about the accounting for how that works, because, and again, stop me if I'm wrong, because I'm never wrong, or I'm often wrong, but never in doubt. So $50 restaurant, $50 to spend at a restaurant, customer pays $25, you get the $25 at OpenTable.
We don't book that as revenue. We share, in that case, the $25 with the restaurant, and we only book as revenue.
At the time that I pay it, you give $12.50 to the restaurant.
We give a portion to the restaurant. Okay. We haven't disclosed what that, and we book the remaining as our revenue.
If I don't use that, do you got to pay the restaurant back? Does the restaurant, is it recourse? If the customer does not use a coupon, is there a point at which there's recourse for the restaurant?
There's continued liability even beyond the expiration date for the coupon. What will expire is the $50 offer. The customer's $25 is still valid and can be redeemed at any time, even after expiration.
So just to be clear, so OpenTable has this revenue sitting somewhere in the balance sheet to record later, but that might not get recorded.
Yeah, I mean, it's an estimate that we're developing more experience on, and but it's not something that we feel we're not doing right by the diner or by the restaurant.
So if the customer, just to be clear, so if the customer doesn't show up, OpenTable never gets that revenue, even though it's sitting in your balance sheet to be recognized.
Right, they'll be recognized on the path of redemption. We've only been selling this since August, and a lot of the expirations are 6 months. We're just learning how many get redeemed during the course of it. I mean, we're just a half year in. So that's.
Jeff, I'm really glad you can join us. I've been following as you've known each other for a long time. Glad to have you on. Wish you a lot of luck.
Thanks very much, Cory. Thanks for having us.
Emily?
Yeah.